Buddy, to the Big Picture Blueprint. Mason, how's it going?
It's going. We're getting like 2 feet of snow in Colorado today, so that's exciting for the mountains, but depressing for having to shovel my driveway, which I do because I'm a responsible homeowner, unlike you, Dan.
Well, believe it or not, I did shovel my driveway this morning. And growing up near Cleveland, I learned to drive in the snow, so I kind of have fun just sliding around and, drifting turns.
So
had a fun drive this morning.
Yeah, so if you're in Colorado Springs and you see a white Subaru, avoid it, even though that's maybe a third of the cars in Colorado Springs already is a white Subaru. But
it's the main religion out here. So anyways, all that to say, we have an awesome guest today. We have Drew Haney, and many of you are probably already familiar with Drew, but for those who aren't, Drew was an Army officer for years, and he started his land business while in the Army. He bought and sold hundreds of properties, created quite the enterprise, and then sold that business, founded multiple other businesses, including a funding company, Rooster Capital LLC. And since then, he's financed over 400 deals while continuing to build his own portfolio. And he's got an event coming up that he'll talk about. We'll have linked in the show notes here in June. But this was a fun conversation. What did you think, Mason?
Absolutely. It's fun talking to someone that has such a similar experience and track record within the land business of starting off doing smaller deals, starting to do bigger deals, getting involved in the funding space, private equity, and fundraising space. And so super useful for us to learn from his experience and vice versa for him. So I thought it was a fantastic interview and a really great show.
Agreed. Let's bring him in.
Mr. Drew Haney, how are you doing today?
Hey guys, thanks for having me.
Yeah, excited to have you. Drew and I have developed a long distance friendship over the past handful of months, getting to know each other and having a lot of similarities. But Drew, to get started off the bat, what was the moment when you first felt successful as an entrepreneur?
I've never had anyone ask me that. I've probably been on close to 20 podcasts. Probably the moment that came to my head first was I cashed multiple checks in one day that added up. Not cashed. I deposited multiple checks in one day that equaled my annual salary for my W-2. And that's when it broke my brain. And I was stressed because I had to go to the bank in the middle of the day, and I was stressed that my Skype icon was yellow and not green. So because it showed that I was away from my desk. Is the leash, right? So they've got that leash on you. And sometimes I'd have my wife move my mouse so it looked like my office. Not at my office, but at home. And that's the time, I think that's the moment where it really changed my mindset. And I think I quit a few months after that.
Wow. And for people that don't know, a full-time corporate job is about 2,080 hours a year that you're working. That's 40 hours a week times 50 or 52 or whatever that is. Drew, to cash all those checks that was equivalent or greater than your W-2 job, how many hours do you think you put into that?
Yeah, good question. I was at that time, I was probably putting in 20 to 30 hours a week in the land business. The reason I had time to do that is because with my day job, I was only busy 2 hours a day with the day job. So it was like the perfect job to have during COVID, because I went home for COVID and all of a sudden I realized, wait, if I don't socialize, I don't take lunch break, if I really batch my work effectively, I could do all my work in 2 hours a day. And so that's what I would do. And then the other 6 hours I would work on the land business. So I had a significant advantage that most people don't have. One little tip I would say is that if you do have a W-2 and you're still commuting, you have twice a day where you're sitting in a mobile office where you can be making sales calls. We just lost power in here. Where you can be making sales calls and you can, I tell people either be calling leads, be calling colleagues you need to network with, or do really high level audiobooks. There should be no music, right? That's wasted entertainment. Cut the Netflix. And that's really a way to pack in a really potent amount of growth every single day.
Yeah, that's excellent. And anyone who's in a job wondering how they're going to start their business on the side, how to manage their time, I think that is excellent advice, because you really have to utilize every moment you can when you're working a full-time job, have a family, and trying to start a business the way you did and do. So to that end, Drew, how has your land business evolved from when you started and you were probably doing everything yourself, taking the calls, to today, where I believe you have a team and are doing a lot of deals? Can you kind of walk us through that evolution and then walk through what the team looks like today?
Yeah, so I'll briefly summarize where I started and where I'm at now. Started off flipping cheap land in the middle of nowhere. The education I went through they kind of told you, like, close your eyes, point at a map, and as long as there's other land investors doing deals there, it's probably good. So I did that. I started doing most of my flips in Arizona, and I would say the first big change was when I hired my sales manager, probably about a year in, and she took off. Like, immediately, she took away 50% of my work. So once I bought the properties, she would list them, she would interact with the leads, she would do all the paperwork, she would do the self-closing, and then really I just signed the documents at the very end of the transaction, then make a little thank you video to the buyer, and then that'd be it. So that was the biggest step up, was about a year in. Hiring Ditina. She was a buyer lead that came in, and she bought a piece of land from me. And during that process, because the sales cycle, this isn't just, like buy a candy bar where it's just a one-time conversation, right? This is 10, 15 calls for each buyer, because they have all kinds of questions. They're making a big life purchase. And so through developing my relationship with her, I realized, hey, you'd be a great fit to interact with buyer leads for me. So I started doing that, and then I eventually got an acquisition manager, got an admin support, and then fall of last year, I actually sold the brand. So I kind of I shut down. Excuse me. I shut down. I stopped buying properties for this small flipping business. I sold the brand, and I'm on the new entity as a minority silent partner. And so that business is kind of being wound down on purpose, and the employees transferred over with the new owner. And what that allows me to do is focus on the other two businesses I have, which is funding deals through Rooster Capital. And then also I'm working on subdivides myself as the operator, and then also funding subdivide.
Okay. Wow. All right. There's a lot to pull out of that. Didn't realize you had sold your original brand. That's pretty cool. So we'll definitely want to hit on that. But I wanted to pull out the point, because I think you did this much better than I did, where it sounds like that first hire handled more the transaction coordination, the paperwork, the admin, not the main skill within the business, which is being able to close on the acquisition side. Am I understanding you right there?
Yeah. She was doing admin stuff and sales.
Okay.
And I was still buying parcels myself.
Got it. Yeah, no, that's smart to start with more of the admin, more of the low dollar per hour work. Because I started by hiring an acquisition manager, which was not the best way to do it, guys. So learn from my mistakes and do it more the way Drew did. But Mason, you look like you had a question there.
Yeah. Well, Drew, I think you hit on a point that I've always found fascinating within this land space, because I love business. I love the idea of building a business as if I am going to sell it. But with land flipping, it seems, I don't know, interesting to develop a brand and be able to actually sustainably, grow it to the point where you can sell it. So I'd love to hear how you went about the creation of a brand and making it so where, however that sale went, if you're allowed to speak to it, an investor came in and said, I want to buy this business, or a partner wanted to buy you out.
Yeah. Really, it's just being authentic to who you are. The brand was my face, and It was patriotic, veteran themed. Every single ad still addresses gun rights and abortion. So extremely edgy, polarizing branding, but the minority that gets offended by our branding goes away, and the majority that is turned on by it, they buy from us. So I don't know if you guys can tell, we have like a really bad windstorm here right now, and the power keeps going on and off.
No. We can't hear it on our ends, and we have the blizzard here right now. We're getting like 2 feet of snow out in Colorado.
Oh, wow.
So walk me through what the sale of your brand or sale of your company looked like. How did you make that decision to sell? And talk a little bit more about that.
Yeah, it's all, it's not like I listed it on some sort of marketplace and then, I had random buyers reach out to me. It's all through just networking and talking, and your competitors, they hear, hey, Drew wants to kind of get out of doing smaller deals. He wants to focus his energy on other things. And I did consider taking that business and pivoting it with the existing team to do like subdivides. But when I ran the scenarios in my head, the existing team is so good at doing the low cost and volume stuff. It just made sense to keep them at where they're at. So I had 2 different friends and colleagues reach out, and they're basically like, hey, Drew, I know you want to kind of move on. You have this brand that does well. You have a team that does well. Let's talk about, how we can, get you the free time that you want and, have this legacy live on. So I had 2 different offers. One was a cash offer. It was 50% cash, 50% owner financed. And they would have bought the inventory, the unsold inventory, the notes, and the brand. Then the other one was an offer just for the brand, and the first entity that I'm 100% owner of would keep the inventory and the note. And so that's what I ended up doing, is keeping all of the assets for the entity. Then we created a new entity. There was essentially I can't say franchise in California because they'll come audit me or something. But essentially, he paid a fee, to start a new entity with me, and the new entity does exactly the same thing as the first entity. I'm still part owner of the new entity. It's just I'm now a minority shareholder, and from an external perspective, the brand looks exactly the same. There's absolutely no difference.
That's awesome. Yeah, I appreciate you expanding on that. And you don't have to say the actual numbers or anything, but how did you come up with what the valuation of the company was, less the assets that you ended up keeping, I guess, in the original entity of? Is it based on the previous 12 months net operating income, creating a cap rate that land businesses trade on, or how did you guys come to that number together?
Yeah, that was a big point of conversation for multiple months. How do you value a land flipping business? Because really it's all in the intellectual property and the branding, right? Because it's a service-based business. So there's not really any kind of, it's a very difficult, it's a cash flow business. It's not an exit business, right? So really the way we valued it was simply balance sheet value. So inventory, what's the retail price of the inventory? Actually, no, we said, what's the wholesale price? So 50% of the retail. And then what would the notes be worth if you sold them? So you add those 2 numbers together. That's pretty much what your business is worth intrinsically. And then the extrinsic value is extremely subjective. So how much is Drew's face worth with his edgy ads, right? It's what someone might say $1, another person might say $1 million, right? So the guy who made the offer just to buy the brand, he originally offered me no money for the brand, and he's like, "Hey, I'll just keep you on as a minority partner, and then you basically have this annuity the rest of the time this business is alive," right? And then I thought about it, and I'm like, you know what? I want to get something for the brand, and so we settled on a pretty healthy 5-figure sum, and that was the fee to kind of transfer the branding and create this new entity, and that's how we handled it.
Yeah, that makes sense. And there's kind of a couple points I want to make. One, and we'll talk about this a bit more, is just valuing a land flipping business is challenging because how sustainable is the model, which I want to bookmark that and come back to that, because ultimately with your business, with all the land notes, it's more a matter of the value of those notes, really, and then the underlying asset. So that's kind of interesting where, you're just your investor, your buyer for that side of things is looking at it a lot like a bank who wants to buy debt, so that's kind of interesting. But I want to go back to the sustainability. How do you feel as far as being able to execute this sort of business model over the course of decades? And this is a loaded question for sure, but if you wanted to keep that business, not sell, and just operate that for the rest of your working years, do you see that as being feasible?
Yeah, I think what you're asking is like market saturation type questions, which is
just in general market saturation, the ups and downs of building, and there's recreational land, of just the real estate market in general, of economics. I mean, everything that goes into the ability to sell land. We're in a building boom right now, of course, so that helps. But so just holistically, if you had to do it for the next 40 years.
Yeah, well, I think it's definitely doable. I think the biggest reason why I pivoted is because I got bored. I'm a very typical entrepreneur where once I learn the skill set and I feel like I've mastered it, I immediately get bored and I need something else. So with rural recreational land, it's a luxury product, right? It's not really a commodity. It's like almost like Gucci purses, right? So you're going to have your buy price and your sales price will always be floating and moving, and there'll be some seasons where your margins are squeezed, other seasons where your margins are really fat, but you're always going to have this illiquid market, and that business model is always going to be around. And in my opinion, it's less tied to the macroeconomic real estate, like housing market. It's less tied to that than we think. And I'm talking about rural recreational stuff. If you're doing infill lots in cities, I would see that as extremely cyclical, right? Because that's dependent on like lumber prices and how much it costs to build a house and how much money Americans have. With like cheapo stuff in the middle of nowhere with owner financing, there's always going to be somebody who can afford, $100 to $200 a month to go shoot their guns, right? So, so definitely extremely sustainable over multiple decades. I would say even with like more, development stuff in primary, secondary, or tertiary markets, I would say there's been developers who have been doing their jobs for multiple decades, and they'll tell you that there's always ways to make money, but it's certainly very cyclical in how fat those margins are and how many deals you're doing at one time.
Yeah, agreed 100%. And I've wanted to bring this up because this is something that's so often brought up is, how sustainable is this? The market goes up and down. And, I learned about land and development from a guy that's been doing it since the 80s. And he was taught by guys that have been doing it since World War II or are long since gone. And so this is nothing new. And I think part of that is being able to master multiple moves within the land space, right? You know, the rural recreational piece, you know, subdivides, which can represent a lot of different end products. But the point is being able to pivot and adapt to the changing environment. And really the original business with the rural recreational, you mentioned the illiquid, and it made me think about, it's really, you're the bank, you're the financier, where a lot of people want that land, but they can't afford to buy it all at once. And so you offering terms, in effect, you're really the bank. You're creating a way that the average middle class person can go purchase that land because they'd never be able to do it for cash themselves. And so it's kind of an interesting business model where there's multiple facets to it, from the direct to seller skill, understanding the land, but then ultimately being the bank for the end user. So anyways, I ranted a little bit there, but short answer is it is absolutely sustainable, as Drew, I think, said pretty succinctly there.
I mean, but so I think one thing that I don't believe anymore, I used to believe that the land business was some sort of special unicorn business that outperformed any other business model. And then I went to CarMax and they offered me 50% of my car's value. And they said, take it or leave it. And then I realized the land business is not a special business model. They're doing it exactly the same thing with cars. And, I've heard of guys flipping tractor parts. And so the illiquid issue is an opportunity for us, but it's not unique just to land. It's everywhere.
Absolutely. I mean, I've said it before, of the flipping model, we're just pawn shops for land. It's the same reason that people will go sell their $20,000 watch for $10,000, and then the shop can go back and sell it for $15,000. People are persuaded by our amazing skills as salespeople, or they are in a stressful situation, just need to get rid of it. But Drew, I'm creeping on your LinkedIn, which accept my request whenever you can, so I can go validated by you. But you were a commodities and currencies trader, whether that was, side hustle or full-time gig. Dan has read it. I'm currently reading it. It's a book about the world for sale. It's about commodity traders. I'd love to hear about your experience in that role, just because I'm reading a book on it and super fascinating. And then two, how you applied any knowledge that you gained whenever you were trading currencies, commodities, and equity index futures into the land business and getting that started.
Yeah, good question. And, we can nerd out on this stuff for a while.
Let's do it.
I traded for 5 years, probably like mid-20s to late 20s, maybe early 30s. First 3 years were full-time or part-time while I was in the Army. And then I left active duty and I traded full-time for 2 years. So I did foreign currencies, I did commodities, I did some options. Equities are really the only thing I didn't do. And it was like the most wonderful, it was like the most painful and the most wonderful thing I've ever done. One day you make $2,000 shorting corn, and then like the next day you lose it all on, cotton or something. So I ultimately stopped doing that because I wasn't consistently profitable. I had a 1-year-old child and a wife at the time. And I realized, this is like really fun, but it doesn't consistently pay my bills, right? So that's when I got the W-2 job that I ended up quitting with the land business. But what that did, I went through a season where I felt like those 5 years were wasted because, ultimately I'm not doing it anymore, and it wasn't really that profitable for me. But what it did is it trained my brain in 2 areas. Number one, it trained me to completely detach my emotions from money, because for 5 years I was losing and making money every single day, right? And then number two, it trained my brain to understand like macroeconomic cycles and how commodities, and land is a commodity if you think about it. Commodities, they tend to go sideways over time, right? It's not like equities where they keep going up typically. Commodities tend to go sideways, currencies tend to go sideways. And so you can almost predict, like if a currency or a commodity, like the Japanese yen right now is extremely weak, right? US dollar is extremely strong. If you look at a chart, you could pretty much predict that it's at the absolute tippy top for the US dollar and it's the bottom for Japanese yen. I'm not saying make a bet on that, but you can kind of like get an idea of where it's going in the future. And same thing with land in a way. It just helps you understand market cycles, and it helps you understand that these things are commodities that people trade. And the reason the margins with land, the spreads with land are much more like a spread with a commodity would be 1%, right? The spread with land is like 70% or something because there's no centralized market. If you can, I've got a guy, college buddy who now lives in Saudi Arabia, and he wants to take the land business. Actually, he doesn't want me talking about this. He wants to do something really sexy and high tech with the land business to essentially make it efficient. And if we could do that, we would wipe out like all the margins for the land flippers, and I'm just like making myself sound like a villain right now. And we would make that market efficient. We would make a ton of money, and then that would remove the spread between the bid and ask.
Yeah. Drew, I was waiting for the word efficient there because land is extremely inefficient right now. It's not well understood. People don't know how to price it, value it, and so that's interesting. We'll have to talk about that offline if you want to. But there's a point there you made that's so important as far as, well, quite a few points, but a couple that I wanted to pull out is if you feel like you failed at something, a lot of times years down the road in hindsight, you'll realize you learned something you needed to learn, as you just mentioned with the commodity trading. So I'm glad you said that because you didn't waste that time. You learned a lot of the fundamental foundational lessons you need to learn to build your land business and ultimately sell that. And what you said about learning to not be so emotional about money is essential. Mason and I constantly joke that we'd both do better if I just told him what to do in his business and he told me, because we're far less emotional looking at each other's businesses. So that concept's great. As a follow-up to the whole train of thought, as far as learning or things you learned from that business, that book Mason just referenced, some of the biggest businesses in the world are commodity traders. I think some of them are nearly $1 trillion now, because at the time of that book, which was a while ago, they were in the upper multiple hundred billions. So what do you think if you had to start tomorrow as a commodity trader, what would you do differently to be successful?
So I paid like $50,000 to an academy to teach me how to day trade, and I executed their model, what I would consider as close to like following instructions as possible. So I was extremely disciplined. I followed their model, like, verbatim. I tracked all of my trades. I was doing all kinds of metrics. I had spreadsheets, and I still wasn't consistently profitable. I also wasn't really losing money either, because I had stop losses and I was very disciplined. And like a month after I threw in the towel, I was extremely frustrated and I didn't know what I was doing wrong. A month after that, the federal government sued the academy for essentially like teaching vanilla education that didn't work. So I could have gotten like all butthurt about that and felt like I was some sort of victim, but I didn't. I don't know why I didn't choose to think like that. So if I were to do it over, I would first like thoroughly make sure that I was being trained by people who are actually consistently profitable. And I think what's difficult with trading is that I think what works now probably is not what works in 5 years, right? It depends if you're doing fundamental or technical analysis, right? I think the fundamental stuff will work for infinity. It's just a longer game. But the technical tools, I think, are always changing. And to me, even though you can get consistent feedback from your trades, you can get consistent data, and you can run like algorithms into the future, it just seems like a black box almost. Where land for me like started working immediately. And so I'm not super, like, I don't want to discourage anyone who wants to start trading. But for me, it was a ton of fun, just not a ton of money, right? My income now versus 4 years ago is 10 times what it was through land. So land is a little bit more boring, but definitely for me is significantly more sustainable in terms of wins. I have 400 deals, I think close to 500 deals, and only 3 have been lost in the land business. Versus if those were day trades, you'd have 100 wins and 300 to 400 losses, right?
That's incredible. Both on and there's so much that I want to talk about there that'll translate us back to land off commodities and trading. And I think that part of the challenge that a lot of people face that are interested in this space is you spent $50K on a course, and I'm sure you spent, a decent amount of money on systems and subscriptions and stuff like that, but you don't have hundreds of billions of dollars at your disposal that these other companies have, and access to the resources where they're spending millions per year or per month in information that you're just not going to have access to as the solo operator trader. And I agree with the technical analysis component of if you can play that game right, yeah, there is the opportunity to succeed. And one of my great friends that might be listening to this will hear it, and he harps on the point of technical analysis. You can beat the market. And I'm like, yeah, but are you? And did you? And the answer is usually no. But I think something that we want to hit on, because we've all 3 of us at least have a certain involvement with this community of land educators and land coaches. And you spoke about vetting more thoroughly the people that are offering this course and how the federal government is taking action against this academy. For the people that are interested in land education, how do you think they should vet the courses and material out there whenever there's so much free material and there's a lot of people that are making a lot more money in education than they are in their active business? So take that question how you will and just speak on the land education space.
Yeah, I think for the bigger educators, they are certainly making more money with education than with land. But for the smaller ones, at least when I run the numbers and the numbers I know of like what their education costs and what they make per hour versus what they could do in a land deal, land is like 2 to 3 times more profitable than selling education at the lower levels. If you scale it to a massive size, I think those metrics change significantly. But the coaches that I know that are smaller, they're doing it because they truly enjoy it. In terms of vetting, this is kind of like uncomfortable, but maybe ask them, hey, do you have like a spreadsheet? And you can sterilize the spreadsheet, but do you have a spreadsheet of all the deals you've done? Because I have that. I'm not an educator. I have 400 deals. One spreadsheet has 300 on it. Another has 100 plus on it. And, you can ask them for evidence of like deals they've done, right? Because it's hard to be an educator in the land space without knowing what you're doing. I think with trading, like you can teach a vanilla strategy. I don't know. I feel like it's easier to have vanilla content in the trading space than in land. But I'm extremely biased because I've had very bad results in one skill set and very good results in another, right?
Yeah, I think that's a really, really great way to put it. And something to recognize about the land flipping business, and we're talking about land flipping, not the next level of business that we're going to get into as the show goes to the second half of the entitlement deals and funding and creating joint venture partnerships and that kind of thing. But I think that it's a really simple model. Target markets where there's transaction data. We use PropStream in our business to pull data, target people that have owned the land for a little while that typically live out of state, out of country. We use Pebble as our CRM to send mail. We have various cold calling services that we use, make offers, negotiate, sell it on the market, or sell it yourself. That's the three of us, at least like at a relatively high level and maybe some different software and different processes and systems, what this business is, as versus the complexities that go into trading and understanding technical analysis and subscribing to newsletters that are a minimum of a $50,000 a month newsletter subscription to get data at the beginning of every morning. And I think your other point on it, show me the books of, if you're making this money, oh, you have a 7-figure business. Okay, show me. And it's not rude to ask that in this space of, if I'm paying you and trusting you to teach me what you're doing, prove to me that you're doing it. You're not BSing me through this.
And they can, like, this is uncomfortable again, but they can download a PDF version of their of their income statement. And it's like, the income statement shouldn't show really any personal, it shouldn't show anything that's too sensitive, right? And especially if they send you a PDF and you can't click into like what those, you can't see how much their employees make, for example. You just see their labor cost, then it shouldn't be too strange of a thing to ask.
Absolutely. And if you feel uncomfortable or the person won't show you their entire books or anything like that, just say, show me some HUDs, show me some settlement statements showing your company on one and saying, oh, you did 10 deals last month that made you 410,000. Just show me the HUDs. And I think it's for the three of us, we're saying that of we feel comfortable. I'm not going to open up all of my books for you and what my tax bill looks like and that sort of thing. But I think any of us would show our deal tracking spreadsheet and our HUDs if you were interested in doing business with us in any capacity. But Drew, I want to bookmarked one point that you and Dan were kind of talking about of the inefficiency in the land space, and that's where so much of this opportunity is. And Dan and I have a similar company to what you're doing. What made you decide to make the leap to deal funding? And talk to us a little bit about the criteria that you look for on the deal funding side, what it looks like for your joint venture partners or your debt partners, or how you kind of structure that, and where you see that opportunity going and the true sustainability of that. So I know I asked 9 questions in a row right there, but
yeah. So the deal funding came naturally. It came an accident almost. I was in an Army Reserve exercise in the middle of the desert in rural California. And I was really, really upset that all my buddies were doing land deals and I was making government pay and sweating and like eating really low quality food. And I thought I had like 110K in my account at the time. And I was annoyed that it was not being exercised because the bottleneck in my business at the time was me, which it usually is, right? And the reason I couldn't deploy that cash is because I'm trying to think if I was the acquisition manager at that point or if I had hired that out. I might have just been hiring someone like the next month. So I still was at a point where I had too much cash and not enough time. And I get a text from Ajay Sharma, and he said, "Hey, Drew, I know you have money sitting there. There's a guy named Jaron Barnes. Have you heard of him?" I'm like, "Of course I know Jaron Barnes. He's like, on the RE Tipster podcast." He's like, "Well, Jaron has a deal he needs funded like ASAP. Do you want to do it?" And Ajay looked at the deal, Jaron looked at the deal. It had already been vetted by 2 people I trust. And so even in the desert, I couldn't really vet the deal, but I vetted the people, right? So I wired 84 grand, like standing under a tree trying to get signal. And I didn't know, because I was banking with a local credit union at the time, because I was all into the free notary service with Pride. Because I was banking with this like really small bank, their app was so bad, I didn't actually know how much money I had. It turns out I didn't have 110,000, I had 85,000. So I had like just the perfect amount to fund that deal. That deal closes, a month later. I made like 30K with one phone call. And that's when, so they came back to me. They're like, "Drew, we don't know what's up with you, but you're like the most reasonable, chill funder we've ever worked with. You want to fund all of our deals? And I'm like, yeah, I want to fund all your deals. So that's what started that relationship. You can go to ibuyland.org and check out kind of our partnership there. That business is ran by Asia Barnes, Jaron's wife, and her and I make a great team. And then recently, I stopped being exclusive with Land Maverick Society in terms of funding deals. And so that kind of opened me up to the world, and now I can, really fund any deal. So for the criteria, I don't want to fund small stuff anymore. I'm working with a private money guy here in Los Angeles, and he's selling a couple of his apartment buildings to set me up with $2 to $3 million in a capital pool, and I'll deploy that. So I don't really want to fund small stuff. I'm looking for like 100K plus deals. But my website is drew-haney.com, and feel free to check that out. But deal criteria, bigger deals. It has to be at least 2x on a cash on cash. Trying to think what else. I'm not
general timeline for the turnaround of it.
I've had deals where I've done 5x my money and it took over a year, and I've had other deals where you make 1.5x and it takes 30 days, right? So I don't have super strict criteria. I don't even care about, I'll buy something at 10 cents on the dollar with no illegal access, because the margins are much fatter, right? So I have an extremely high risk tolerance, and I'm not super picky like other funders where there needs to be power nearby and good roads. I just care what the numbers look like. Right. So.
Yeah, that's fantastic. And feel free, anyone that's listening, obviously use Drew as a resource. Dan and I do similar types of things, but I think we have a lower risk tolerance whenever it comes to our deal funding and everything. And then the nice thing about working with someone like Drew or Dan or myself in this business is we seek out relationships in it, just like whenever you were initially funding of, okay, we trust these people, like we're gonna help you out in this opportunity. And two, we know what we're doing. Between the three of us, we're probably over 1,000 deals together. And so we can see, oh, that's actually a really crappy deal. Oh, this is a good deal. This is what it would take to be a good deal. So that's really awesome. And congrats on that connection to that guy to have a couple million to work with. That's incredible.
Yeah, that's after and this has been wonderful. I've enjoyed it, but that's 10 dinners, 5 lunches, going shooting 3 times. I don't know if you want to move into the capital raising conversation, but
that'd be great. And that sounds fun. I'm really thinking about
it. It is fun. It's just these relationships at the higher dollar amounts take significantly more trust than what I expected. It's not just one meal and then somebody wires you 20K. It's, he's introduced, this guy is opening his network to me, and I just had dinner last night with a Mercedes dealer. He's the number 2 guy at a Mercedes dealer, and he's netting 100K a month. So this guy is opening me to his network, and I'm meeting all of these people. But because these people are very wealthy, they're very successful, they have been burned in the past by basically the world trying to access their wealth, and they're very private and they're very skeptical, right? So nurturing and growing these relationships has been extremely fulfilling, but also a pretty significant time commitment. I've spent probably 50% of my time past few months curating these relationships. And again, it's been wonderful. We get to eat food and shoot guns. But raising capital can easily be a full-time job.
Yeah. Well, and it is for many people. But you make a great point there that I hope the audience heard, which is it takes years and years to really develop the trust of someone. And especially when you get involved with really wealthy people that are so used to everyone wanting something from them, and they're suspicious, and rightfully so, because oftentimes, is this person actually care anything about me, or do they just want my money? And so it does take a long time. And I'm seeing the same thing, Drew. The people that invest with me, it's taken years and years to really get to know them and develop trust and develop that relationship. But to that point, when you take the time to do that, when you do it right, when really you just build a friendship over time, then they trust you. Then you still want to formalize everything, but you can kind of just point and they shoot with, hey, this deal's coming along, and they get to the point where they just trust you to fund it immediately. So you made some important points there where I hope everyone listening, you got to take a longer term perspective, really for everything, but especially when it comes to capital raising at a significant level.
And I do want to talk about, I've noticed, I'm sure it's in books, I'm sure other authors have noticed this interesting trend, but there's a generational baton that gets handed off. And typically I've found that the guys who really connect with me well are not the peers that are my age or slightly older than me. Those guys are my competitors, right? The private money partners that really I've found I've had extremely fulfilling relationships with is the ones who are in their 50s and I'm in my 30s. And they're at a season where they're slowing down as a hustler and they want to be more of a passive investor. And I'm like the operator who works, and they're the money guy who provides the money. And they did what I am doing. They did that 20 years ago, and there's this handoff. And so there's a ton of successful business people in their 50s and 60s who are looking for that, late 20s, 30s, maybe into the 40s age range where the operator still has a ton of energy. They're very trustworthy. They just don't have enough money, and it's a perfect symbiotic relationship.
Drew, I couldn't agree more. And along with that, then really you have a more experienced coach and mentor who can help double check what you're doing, look at your deals. If they've been in business for 30, 40 years, they certainly can see pitfalls that you might miss. And so I've had a similar experience in my own business. So yeah, agreed.
I think a follow-up to kind of the point that you're making, Dan, and that we're talking about here, Drew, is that obviously you need to sell yourself to these investors that are going to want to work with you. You have to have a track record. You have to be and come across as a trustworthy person. But on the flip side of it, you mentioned it's like a full-time job of these large companies. They have entire IR departments or investor relation departments. I have worked with capital providers and private money that are fantastic to work with, that I don't hear from for months or even years. And I've had people that are checking in multiple times per week that after we do a deal together, I'm like, I don't know if I want to do a deal again with these people.
Yeah.
Because you trusted me with a significant sum of money. Now trust me.
Right.
What do you look for in this two-way relationship, two-way street with potential investors that are either green flags or red flags?
Yeah. So I think I have room to be picky with high maintenance or low maintenance investors at the lower levels. So that the types of guys who are sending me less than 100K at a time, I can be picky with those guys. But the types of guys that are sending me 500 at a time, I'm not at a point yet where I feel like I can be picky with saying no to the high maintenance ones. But eventually I'll be there, right? And then maybe then the next level above that is the guys who send me 5 million. When you're accessing like a talent pool that you haven't accessed before, beggars can't be choosers. You got to kind of just say yes to the ones that say yes to you. And then if they're driving you nuts a year later and you have enough capital from other sources, then you can kind of slowly fire them then.
You're always I just want to say you're always restarting at level 1 as you move up. Like you move up, you master something, you move to the next tier, and you're the newbie again, and you got to just put put your head down and learn and take what you can get. So anyways, Mason, go ahead. What were you going to say?
Yeah, no, I basically the same thing of I started out in this business, and Dan, I know you did, of the percentage of the profit of deals that I gave up at the beginning compared to what I do now. I mean, it's inversed. I used to give up anywhere from 30 to 70% of a deal that I was doing to my capital provider that's a passive investor. And now I'm at the point where it's like, hey, it's on the basis of what the actual acquisition is rather than on the profit percentage, because you keep leveling up. And I think Drew's point that he's making there of, he's done it. He's gotten tons and tons of people that work with him that can provide that smaller dollar amount. And it's like, I don't need your money. So if we're going to work together, it works like this. But now you have to develop that new track record, or as Dan said, starting out at level 1 of you're moving into the private equity space. That's what you become whenever you start raising money, is you're essentially a private equity fund manager, even if it's not technically a fund, that you are managing other people's money and you have either a legal or assumed fiduciary responsibility of this money. And the more zeros that you're managing, the different types of individuals that you're going to be working with, and the new track record that you get to make of going from 6 to 7 to 8 to 9 to 10 figures. It's a really fun transition. It's cool to watch your journey as you do this.
Yeah. Same. I feel like you guys are probably half a step ahead of me in the capital space. Maybe we're at similar levels in terms of land business space. And it's really fun to kind of run alongside you guys, and we can learn from each other and sharpen each other. And you guys are the type of guys I know you'll continue to be successful for multiple decades. And I'm just happy to check in every 6 months and say hi.
Oh, yeah. Well, and that's the beauty of developing relationships like this. That's part of the reason we have the podcast and that we go out. And you're in Southern California, and there's a lot more money out there than in Colorado Springs. And it's this intimidating factor when you start working with these ultra high net worth individuals or family offices or private equity firms where it's like, hey, Drew, I've got 40 million. What can you do with it? And you're like, I've got 9 million that I can do, but let me talk to Mason and Dan, who might have another 10 million. And then let me talk to Jaron and all these other people that have a few million that they can deploy. But I know we're starting to run out of time, and we're probably going over what we booked, but Drew, I know you've got a super cool event coming up that I'm going to be in attendance at. Why don't you share with the audience what that is?
Yeah, it's called Supercars and Land Investing, and we're going to talk about land investing and land subdividing, and we're going to drive supercars. So it's in Golden, Colorado, June 28th and 29th. We will have cold plunges, saunas. We'll have beer coolers that'll open at lunch. It'll be the first event we can drink a beer at the table while someone's speaking. So I've been asked multiple times, what's the upsell? What's the play you guys are making? And really, there's no upsell. We just want to have fun. Peter Nukasani, this is his brainchild. I'm really the muscle and he's the brains. And him and I really just want to, get practice public speaking. And we want to have fun. We want to be seen as an authority, but mostly we want to do deals with people, right? So let's say someone has 100 acres in Texas they don't know how to take down, and maybe I do. We could partner together. Everyone wins. And really, these events, they don't. I think I've hosted 3 or 4 events now, and they don't net a ton of money. But what they do net is relationships that make you money, right? And so that's kind of the play, if anything, is just wanting to do deals with people. So the URL is www.milkhoney.land. And I need to talk with Peter. I know we're removing the early bird discount. I think we said it was either the 19th or when is this podcast being released?
It's probably going to be in April that this one comes out.
Okay. Well, sorry, guys. You might not have an early bird discount, but it'll still be fun. I compared it to, I'm not going to name names, but I compared it to one of my competitors' events. One of my competitors has a 2-day event, and they're charging $2,800. Our pricing without early bird is $1,400 for the exact same amount of time. In my opinion, it's the same amount of value, if not more. We've got 4 keynote speakers, 10 panelists, and 7 supercars. So it should be a good weekend.
That'll be fun. You'll get to see myself there. You'll get to see Drew there. Maybe Dan, depending on his scheduling, and tons of other people that are within this land space.
Yeah, we'll see it.
We'll force him out there. And it's sauna, cold plunges, beer. It's milkhoney.land, if I heard that right, and we'll make sure to have the accurate URL in the show notes. But $1,400 is nothing. If you gain one relationship, one new strategy to implement in your business to garner leads and deals, more than worth it. So, Drew, as we move towards the end of this, are there any questions that you wished we asked that we did not?
Oh, man. You guys have good questions. I don't know. I just like to show up, see how you guys are doing. It's funny. You guys are pretty much in the same, like we're technically competitors, right? We both fund deals. But one mindset shift I wanted the listeners to make is you need to start seeing all your competitors as actual collaborators. If you treat them like competitors, you're gonna have weird vibes. Nobody's gonna want to hang out with you. If you see them as your buddies and your friends, and there's cooperation, everyone makes money together. And so, I just appreciate you guys. You helped me promote some of my funding endeavors, the event, and you guys are just go-givers, and always love to be in the same room as you.
Awesome, Drew. And that's our goal. 1 + 1 = 3. And that you're going to recognize we don't view anyone as competition in this space, not because we think we're better than everyone, but because there's more than enough business to go around, and every person is unique, and they're going to respond to different people in different ways. And if I know that someone works better with Drew, we can send them their way and that sort of thing. But that's the beauty of this business, and the collaboration and the opportunities which come out to Drew's event in Golden, Colorado at the end of June of 2024. And this is Mason McDonald along with Dan Haberkas with our good friend Drew Haney for the Big Picture Blueprint, signing off.